And we're live. Thank you very much for tuning in. If you're new, hit the subscribe button. If you're not, hit that like button. Price action on GME. Currently 128.13. The low of today 126.93. The high up at 136.80. Ooh, so far away now. Below the 200 period moving average on the 4 hour. On the 3 day 200 period moving average down at 91.37. 5 day 200 period down at $60. 2 day is above us. Up at today's highs. Was this something else I wanted to look at? Where was it? Just stick to the 3 day one in the 95s. 786, 886 retracement within this Fibonacci, and where you might see a previous low. There you go. $80 and change, right? There's wicks into the 70s, but that's that previous low within this trend. And you can see that on the 3 day time frame quite clearly here with the lower highs and the lower lows. This is what we would like to arrest, this downward trend. We've put in a low, and we've put in now a retracement beyond a 236, so you can call this a local high. And then in context, that's a lower high. So we've hit in lower low, lower low, lower high. Right? And if you take it all in context, you've got lower high, higher low, lower high, lower low. This you couldn't really, in context, do you say, right? It never even made it back above the breakdown point. So like lower low, lower high. And it begs the question, doesn't it? Is there going to be another lower low? And that's what we're looking to change. We haven't managed to put in a higher high, right? That would have been breaking the horizontals up here at 239 from this previous move to the top side, which we've tested a couple of times throughout this formation, going back as far as 25th of August. So we really wanted to get up there, but we didn't, and we've gone back beyond a 236. And the question becomes: is this retracement? Turn off the drawings. Is this retracement from this high downwards? Is that going to be like this retracement in that we put in a low, we got back to the basis point, well, mid-level of this downward sloping formation? We definitely made it outside of that, perhaps to in around the market structure pivot point. Probably that would be what you'd call around 140. And then we continuation, right? You had continuation, put in a lower low. Is this going to be similar in that we see continuation to the top side after this retracement, or is it going to go further, right? That's the question that you'd be asking at this stage. You'd want to be measuring these moves and the magnitude of them and comparing it to the magnitude of these retracements from the top side to see which is, if this is stronger than here, perhaps that suggests that we're going to go back down beyond, greater move than that took. And this is what we define this with a wee retracement here from that high to this low. Price action went to the 382 and collapsed again, right? So that's one way of looking at it. And then if you were to take that Fibonacci here from this low to this high through the 236, there's a 382 at 137. And we've gone beyond that, right? That's that level. The 200 period moving average came in that other time frame. So we've gone beyond there. And does that mean, where do you aim to below? So you've got now a series of places you can go to below. From that TA we just did there, you might be using the 200 period moving average as your distinguisher for the trends there. Are we going to stay above that? Is that the next natural area to retest? Having tested it once, reacted from it, failed at support and come back, do you use that 200 period? 2 day time frame, that's it, back up there around wherever, 141 daily time frame, even further up at 160. You've gone below it on all those time frames, but you're still above it on here, where you'd be looking, thinking, do you find support, right? That's one way. Another way you'd look at it is that 382, which you've gone beyond already. So then what's the extension within the Fibonacci? And that's totally understandable. If you were to be looking at it from the Fibonacci point of view alone, then you'd probably look at what it had done previously in these two. This is from this high to this low, different from this part of the trend, right? Higher high, so last part of that trend there where it was high, lower high, then we had a higher high, so flux, and then this started this consistency. So from here we take our Fibonacci high to the lowest low since then, And you can see that we went against that trend back up to the golden pocket. And then, so on this Fibonacci, self-experiencing flux within that range. But if it's the same, then you'd be measuring the Fibonacci from here, from this low to this high. And the retracement then going to be golden pocket, which it did here. Right? It bounced to the golden pocket. Does it bounce back to this golden pocket, which is coming around 111? And then you'd say, well, that's slightly higher than the 200 period moving average, and it gives you another area to put some emphasis on route to the downside. If you'd stop there, great. If you don't, then that's got other implications. And then, of course, just naturally from any Fibonacci, you'd be looking at the 50% to define how much of a retracement had gone on so far. And currently you're sat right on that, around 127.93 there, but for a hop, skip and a jump. What else have we got in at this level? We're still on the 3-day time frame, but we can drop all the way down to hourly now. As you see, there's a flash 138.2 back up in that area where price action broke down from. So retracing those levels. So you can see these two orange lines now on the hourly time frame. And they define, whoops, Daisy, get back over there. They define this little horrified guy, right? He's obviously seen a bad murder, facing the wrong direction, but that's because he can't bear to even look at it. In here, see, look, he's, there's this bad murder, and the low side of that gap is 125.73, top side of it 126.55. So in and around these areas, the question becomes, do we find some sort of a bounce? If the top side or the bottom side of the gap are defended, it would be revealing for price action. Even if you'd been patient and waiting for the whole time, you might want to see it in around the 125 levels, 125 and change. I mean, that could even be more accurate, really, if we take it down. Right, 125.61, maybe even a tiny bit more, because it looks like there's a tiny bit of a gap. Anyway, it's not about exacts and, trying to catch knives and whatnot. You want to see it at the time. So you want to see it at the time and how it performs anyway, probably. But that's the interesting point, there is the interesting point there. People will be collecting it. People were on Discord chatting about it earlier, for example, and other people. So here is the golden pocket then that we were talking about. Within that Fibonacci, you'd see a retracement all the way down to 112 and change, that being around here. This golden pocket, that would be beyond the pivot point of this previous low, which we've already currently sort of violated, below these levels of hopefully support, which previously were resistance. They weren't really all that strong when we went through the first time, but it did form a nice area to get a bounce when price actually came back. So that's what we're looking at now. That, the breakdown point here, that's the 1382, 138.2. And if we take a Fibonacci then and say this is then a local low, it hasn't actually happened until we go through the 236, the top side obviously, but let's find out where that is. And you can see that 236 we back up at 138 and change, so you'd fill that gap, get back to the 236, and that would just be a retracement or an oscillation up to the first retracement level. Wouldn't even necessarily, until it gone beyond it, it wouldn't be a successful Fibonacci retracement, and you couldn't use that tool for anything, nor could you define this as a local low, and you would of course expect continuation if it can't manage to get through 236. If it does, that's that golden pocket, right? You would be doing it in advance of testing this one, so perhaps that rhythm would have changed, but up here you see it up at 169. That'd be resistance for a number of reasons. You've got horizontal levels there, 159, 145, 236 within this Fibonacci if you turn around now. So that's if you turn around now. If you were to turn around at the golden pocket, your 236 would be where price action is now, and then that would be two reasons to find resistance above you, right? Which is like not fantastic, but also gives you a degree of confidence. Bottom side of that golden pocket, similarly, you'd have a golden pocket retracement back up around 155, which all speaks to the magnitude of the move. And then you look down at the momentum and say, well, what does that say? Well, continuation, but we have made it into the bearish control zone now. This no bullish divergence, and in the bearish control zone, not fantastic. Looking left, you can see you've got a lot to go for your previous low on RSI and on price action, so that speaks to a degree left here on that range. The MACD has been collapsing as you've lost that 200 period moving average, an early emphatic loss there, and the DMI came through to the top side with the DI minus and the ADX coming up with you from a period of high volatility. So like this is it. This is it. Unusual volatility. That period of volatility has not yet ended. 30-minute time frame. You get any immediate signals here? Bad upon bad upon bad upon terrible. That was like terrible. And then one, two, you got 2 warnings, and then the thing happened. So this looking left on the 30-minute time frame, you can see, right, you're close, very close to that gap. Still not closed it. And continuation would be expected. People aren't going to jump in it and pull it up from like just before the top side of the gap. That would be completely an early abnormal behavior. So there's 236 here, where there's lots of different ones, isn't there? We'll get rid of that one first off. And then that one, just because. And then why not this too, just because everything's in the way. Wait a minute, where is that? What was that? That was a 0.5 from this. That was the overall one. We'll leave one on. We can have one, can't we? We can have one. Yes. So everything working, right? Audio's working. Chat's up there. Everything's working. Great. Everything is working. I'll turn this on. Yo. Connect. How is everybody in chat? I see Bulldog. Yo. Katie Babes. Shadow Lepton. Tammy Yo. Colin S. How you doing? Homer's Ghost. Lady Kim. BMJs. Yo, buddy. How you doing, brother? Tradespotting, what is the most likely split ratio? Yo. Considering they are authorizing 1 billion shares, do you think it will be a large one? The split ratio, well, it's 300. What is it at the minute? They've got the possibility of, and including those in Treasury, is it not add up to 300 or whatever? Something like that already. So it's like 3-1. That's what I was expecting, 3-1. That's what I thought the math was looking like. But so yeah, any more than that would be positive. Any less than that would be not actually all that disappointing. I mean, I'm expecting it to be 3-1. The thing with it is the implications will be like, there's 2 implications that Ryan Cohen's had obviously spent a lot of, but I imagine a lot of time thinking about. One being that a stock split via dividend doesn't raise cash for the company the way you could obviously do so. You could sell the shares, right? You could just issue more shares and do a further offering and raise loads of money. So there's that, right? The implications of that are that might have a depressing effect on the share prices, or at least would put a lot of shares into institutional hands that could have gone elsewhere. So there's that. But the overall concept is like that, we're doing something that's going to not raise us lots of money, but could do. And so like there's something there for the shareholders. And then the second consideration is, how is it going to work afterwards when our shareholders have got this increased liquidity in the form of shares? Are they going to covet them as they did the 1 to the 3 or however? And what are you thinking in terms of ICE? I call you ICE. What are you thinking in terms of stock split and the ratio? What do you think it'll be coming out like? I was anticipating 3-1. You were open for 7-4-1. 7-for-1. Wow. Yeah, so this like leads into the second point, it's all very much of a muchness. The market cap is what, at the end of the day, it's the same. So, literally. So, there's a psychological effect which makes the shares more accessible or like quote unquote affordable. It's again, that's a perception, but that's what it's seen to be, and so very often people do that. That's why they would be like, well, our shares, we're going to keep them less than $100. So let's have a little stock split there, and then let's buy those shares back to reduce liquidity too. So a la Apple would do, they're constantly doing it and then buying them back. So is it similar? It's like a similar idea there, may well be. And that's like a good way of, tech companies managing their stock operating. So we'll see. But then so that's the second consideration he's got at the time. It's like, well, how are people going to react when they've got 3 times as many shares? How are they going to react when they've got 7 times as many shares? How are they going to, if they've got 100 times as many? And there's a psychological implication, even if it doesn't affect yourself and I, because we understand like certain aspects to it. There will be other people out there who are thinking, wow, well, I don't need 58,412 on that or whatever, right? Also, there's a consideration of like the odd numbers and whatnot. I mean, does that lead people? I mean, I've said it a couple of times on here, when you buy something and you're buying it and you're buying it and you're buying it and then you look at it and you're like, geez, I've got an odd number of them. You just buy another 2 or three. Well, 2 wouldn't help, but So anyway, I'm getting distracted now. So what was the original question? So yeah, I was thinking 3 for 1. But then I don't actually care too much. I just think it's great that there is stock split via dividend and how that's still fits well with everybody's narrative since the beginnings. Bing bong, Jimmy's on. Hi, Jen. Pairs at Cohen, buys the gap. Buys the gap. Buy it right up. I'll take 30,000 for it. So, yeah, see, it's totally. It's supposed to be right, Stonkowski. Yeah. Oh, no, I've got. Oh, tragedy. Thanks yourself, buddy. Thanks very much. So, aye. Yo, Mango, how you doing? I'll buy 3. There's one. I'd buy 3. Yeah, 3 does. 3 sounds better than 2 when you're looking to fix a lot. Not that they do like to fix odd lots. I mean, that's all about fixing something else, isn't it? Oh, look at me, some of those odd lots. Oh, look at my short restrictions have gone. Oh, brilliant, brilliant, brilliant. Oh, print some shorts. Oh, I'll locate them later. Not so lazy. Clean your room, short hedge fund. Anyway, yeah, no, this is it. I was on a roll for there, and now I've lost it. Yeah, well, I will. I was, but I don't trust T212. I don't. Nah. Thanks for making me giggle. You're welcome. Die another Dave. There you go, buddy. Well, yeah, I want all of mine too, but I don't trust T212. It's the T on the 212. But onto 212. Oh, Jimmy, come back. 7 times as many shares is good enough us if they force a price on us. Yeah, that's a true story. Good point. Didn't really think about it like that because I don't think they're going to. But yeah, that's a true story. It does make it like that. Good point. There's always something. They'll never get around us completely. Right. So did we do all the DMET? We got down to the 30-minute time frame. We were speaking about whether this is going to be arrested. 128.16. What was that look like on 15 seconds? 15 seconds. 129.5. Whoa, Jimmy, come back. Stretchy. So we won't worry too much about the moving averages on the 15-second time frame, and if we were to turn off them, lots and lots of gaps, as you can see, and to draw any particular trend line across it would be futile. You get a general impression, of course, but do you really need the line? So 1 minute, filling out the picture a little bit. You see, it's backery. What's this? Regular reading hours. Right, so you come down close enough, right? Close enough, near enough, I suppose. That reaction subsequently looks good. Let's take it from this area here and just have a quick idea of what that would mean. 129 again, so you'd be back up at... Hello, Fib? I just drew a Fibonacci there. Sneaky. That'd be back above your 236. After this low, it was higher low on price action, so no divergence to look to, but I suppose you could go between these two. Again, no real divergence in the RSI. Touch of it on the MACD, 1, 2, 3 touches it. In fact, this doesn't look very enthusiastic, does it? You're not asking it to go very far, and it's got lots of reasons to do it anyway without me asking it to. Why is there 2 Fibonacci's again? Just double vision. 15. And you get a clearer picture there, 236, that this would be nothing compared to what you've just done. This breakdown. And within that sort of thing, there's plenty of people like, how far is this going to go? And it's like, well, until somebody decides that's as far as it's going to go, really. Which I can't imagine them saying emphatically right now. I mean, why would they? So, unless it's Ryan, and he is in there and he's like, which would be quite funny. But why would the bulls be buying it there? You know, to defend, like they would buy it here or right in the golden, right? There's a gap. I mean, it's not like my lines are there for just arbitrarily. Didn't we make them perfect and everything? You know, there's top side, there's bottom side. So, right. That's the gap. Anyway, it's on the hourly as well. So we'll go there and see that so far the body still comprises most of this candle, including the wick, and that it opened below the close of the previous body. And that if you get 2, then you're going for right. What's next? Likely another. And if not, right, the retracement takes you back above 236 on this 1 hour time frame. Then you're looking at the golden pocket. You get above that, then perhaps you go back and you fill in this flashing hourly. It's just that you're looking for that right now, and it's obvious it'll go back there eventually anyway, isn't it? Right? Especially if you're calm and what. And there's this now. It looks awful. How are you supposed to be calm when it's so much? It's so very bad. Right. So we'll see. We'll see what else has been happening, right? And that's not as bad as other stuff, right? So, interesting news, right? Elon Musk bought Twitter. He owns it. Congratulations. Right. Congratulations. I'm sure you'll make it work for him. And this is DWAC, Digital World Acquisition Corporation, or whatever it's called, which has had a negative reaction to the news and is down a significant percentage, but is already down anyway. Further oscillation within that trend. And you can take it from here. Nope, we take it from here. That's much more sensible. Tradespotting to this high. Aim for a 1.13 extension. You've already pretty much had that. Further drops would take you down to $18, which is like a huge, huge, huge chunk of change off price action where it is at the minute. To expect that to happen, not necessarily, but there is a lot of different dynamics from Twitter being bought. Obviously, you had to pay enough to take the thing private. For a public company, you know, if you wanted to take it private and it not to take forever, then you're going to have to bid slightly above what you're paying above that asking price. Anyway, so right. Also, interest because of that is Dogecoin. Ooh. Right. So for freaking ages, this has been heading here. I mean, I know it did do that once, but it's been coming back for freaking ages. 6th of April. I knew it. I was saying this is still at least 2 weeks of my sleep. Right. So price action doing well to reach these levels there. Reaction subsequently down at 0.1497. Tested back above 16 twice in this move. Is this going to be taken similar? This is up what in the last couple of days? What's this up? I suppose we could work it out right with a ruler, with one of these magic rulers. Last couple of days. I mean, I'm not even being desperately accurate, but you're looking at 40% increase in price action on that thing so far. And does that, you know, it's like exceeded certain levels. Certainly has done. 4 hour. I'd look to that previous trend and say, you know, you broke that a while ago. Right, you broke that a while ago. This very positive price action to bump back up, and let's see, does it now start to run? Looking left, you can see horizontals on that same time frame. That would be interesting. Also, one matches up with the previous flash area. Drop it down. Low within that part of the formation. That's the low previous. I'll just go back up to the daily because I can't be bothered going all over the place, and you can see some other drawings on time frames above us here anyway. So we've all got that scoped out, and then it's different Fibonacci's. Don't think we need this little move back here on. Leave those other drawings because I don't know what they're part of. We'll take it from that high to this most recent low and say you exceeded the 236 at this stage and broke out of this downward sloping formation. Made it to the 382, rejected there. Do you hold this horizontal or that 236 and put more faith in that 236? Mind you, it's the daily time frame and the others on the 4 hour, and it is still real, so I'll just leave them because I can go with both, can't we? And then instead, as a compromise, take this guy up. Thanks. And you're still in line with this golden pocket top side, so break this 236, you'd be aiming for in around 0.22. Like when I say break it, you've already violated it and exceeded it by a significant distance, but here you are back retesting around those areas. So c'est la vie. If it does manage to break to the top side, we'll be looking for it up at 0.22 and then perhaps some more, right? Because the narrative that's driving it at the minute is a real one. Now, it's a real one. I mean, it has been real obviously the whole time. in retrospect to some people. It has been real. And the trend has been broken since, well, a couple of times, but definitively I'd say now you're breaking that trend, especially if you're taking it from not that ultimate top, which was self blow-off divergent top, but instead that part of the range here, you say, you broke that just as you did with this other one. Anyway, so to me it looks like it's possibly turning around but taking a big swing, right? Taking a big swing round again, and judging it above the 0.22 level. Previous highs from this same Fibonacci you're on take you to your previous blow off top. So it looks like it would go back to, it would go back in a crazy move. It could go back up to 0.7194. I'm not saying that's going to happen right now. I do obviously think this thing will go through various moves throughout that, and some of them might take it back down to retest important formation lows or highs, like this current move right now. It will at least likely take you, I would expect, a test of 236, and that's at 0.1427, whatever that is, 24. And horizontal level below it, and then this previous level of supply on this formation here could easily be tested again. If you don't break this previous high from the first start of the breakout, then that would be, people would then be anticipating it. And then if you retest your previous lows at 0.111114, loads of people will be heartbroken apart from everybody who's buying the crap out of this thing, thinking, whoa, it went up 40% move the last time it was here, at least probably bounced enough for a significant trade at that point. Anyway, why am I talking about this? Anyway, so 30 minutes... bearish control zone rolling over there. Looks very much like Adam and Eve. Price action not divergent because it was a lower high, but you failed to break it back inside the bullish control zone, lost the center back into the bearish control zone. 30-minute time frame, similar picture. MACD says, oh my goodness, get out of town. Looking left, you can see you're actually at support though, so possible bounce a little bit further, take it there, bounce, it's possible. Within this move, you've made it back, as we said. I think we checked this already, beyond 236. Take it across price action. There we are. 1.572 extension down to 1.371. Not a point, obviously. So, looking left, that would be back within the previous formation. You'd be a little less confident, maybe. Who knows? Who knows? Hi, Jumper Buggy. Hi, Jen. Hi, Homer. How you doing, buddy? Danny Droog, how you doing? Great to see you. Mango, thanks for being a Patreon. Mason, thanks for being a member. What's the fun? How are you all doing? There's KT with the secret magic coffee ingredients. Hold up. I'm going to rewatch the DME section. Hold up. Wait, we'll wait for a bit. Other big drops recently. Ride back down to this previous low at 236. Is that from that previous low? Anyway. Interesting. Twitter. There you are. Enough of that. Would have been good. Bing bong. Rocket companies. Hard time recently. What else is having it? What else is having a hard time? So, FUV. Oh my goodness. Daily time frame. See quite how awful that is. Exceeded this golden pocket retracement. 3.53. At 3.35. And then horizontal level looking left, it's like hard to ignore at 2.08 and change. Hello, keep it up, Jamie. Love this community. Yo, Justin, 9 months. Thanks so much. Yeah, totally. Thanks to everyone who supports the channel. Just be a wee member like Justin, or a wee Patreon member like Mango. Or anything you do to support the channel's great. Thanks. Watch time, fantastic as well. Hello, keep it up, Jimmy. Love this community. Yeah, the best thing about the community is how everybody helps each other. That's the best thing about this community. And that's great you contribute to that as well. Thanks so much for being here, Justin. Thanks so much for everybody who's like that. Thanks. So also, not thanks to FUV. Not that I own any of this, but oh my goodness, that's a big retracement there. What else is interesting in it? KQSD, boom. Thanks for that nice message, Justin. What else is happening? Tesla, nearly 10% off there. Look at that. Tradespotting lines. Tesla loses 10%. What's going on? What do you think, Coco? Why is Tesla at Tradespotting lines? Huh? Why? And how did you escape from the bedroom? I thought I locked you in there. That's the daily time frame. Whoa, it looks even more dramatic on a 4-hour. However, right, this also feeling the center line RSI was what gave you the first sign there, and you had it on early, long beforehand. But couldn't get back above it properly. That awful, filled that gap. that retracement, and then straight after. Anyway, why am I laughing? So this is meeting a number of horizontals and an upward sloping diagonal, which is super interesting. With regards to the Fibonacci 382, this is rolling over here, 3 touches of that. I mean, I suppose you could straighten this out. So 1, 2, 3. Higher lows. Suppose that would have been the reason that you made such a strong retracement back up to resistance, was this divergence here. That being so obvious. Sustained in a third touch of it. Hi, Coco. Hi, Coco, says Homer. Homer says hi. 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 Coco's like, what's all the noise? What's all the noise? It's bedtime. Let's go fix this bedtime. I wanted to short Tesla so bad, but damn options be pricey. You're telling me. People love it. Well, quick cover on my Tesla. A lot of options on Tesla. Option chain did get expensive there. Couple of times. Anyway, so there's a couple of times it's gone. It's like they got down. They'll come down eventually. It's like the Ethereum miners. You get them eventually. Nope, didn't happen. I could probably draw this one more actually. Is it still relevant? I'd say it plays a role. A price action retracing since this down, lower highs, lower lows, and you're wondering like that was typically this would break down anyway if this was a wedge, like an upper sloping wedge like that. Typically it would break to the bottom. Having made it out and then done the measured move to the top side at this level of resistance, then broke up again. This was on news. Google's on top of the computer. She likes it down there. Roblox, you got another 7%. Through the basis line. This is what we didn't want to see happen, but it happened. Look when we see it on the most dramatic. I suppose we take it off the drawings. No, it doesn't look as... It looks better with this red road of danger. And then we can move this guy down. That previous low, you don't have divergence across these two areas. See the basis line there. Not really destroying that downward sloping demand line desperately, especially if you take a couple of touches. Just a couple. Across the top side, you can see resistance now would meet you. Diagonal downward sloping resistance would meet somewhere around that basis line. 35.76. Roblox. Why are you cheaper than I last bought you, Roblox? So, bearish control zone, I can't argue with the bearish control zone. I mean, you can, but it's a bit silly. So, the price action is in the bearish control zone there. No, it's not. Why do I call it all that? I always do that. It's not. It's the RSI. It's in the bearish control zone. It's blown its own moving average and it's putting in lower highs across RSI as price action breaks important horizontals and continuation on the formation. 15-minute time frame, not going to get any more other than a potential. I say that, but then Rocky Grubs thing does it again. That's 10% on that, eh? So, just like interesting. That's interesting. 30-minute time frame. That's where we were. 1 hour. Aye. Brutal. Crossing again. So far away from the 200s, right? I'd expect to see it meandering down to 40 as well. This isn't going to make it back up there quick enough to change that orientation. To like kind of... Miles away up here. Can we move this? Can we move it? We can do what we like, Tradespotting. Can we move this thing? Yeah, thanks, mate. Success. Hey, it's that easy. No. Anyway, shall we do another one of these? Right, so, I mean, there's this channel, isn't it? It's like... obvious. So let's also draw the Fibonacci retracement levels from that low to high 113. You were here yesterday, exceeded that. You're worried then it'll go down to the bottom side of the channel and meet the 1618. It does look very, compelling, doesn't it? So if it does get there, that would have to be like quite immediately. Otherwise, that level. And anyway, you could just do it around the basis line, meander down here like I did before. Let's just watch it happen rather than try. Let's just watch it happen. Go back up to the weekly and define something, see what's going on here. Nothing on your indicators. Not really been long enough for that. What is the overall one? $2,618. Find some area of some interest in around the 1,618. That was like part of a number of oscillations. Oh my goodness, there goes a wheel. Oh my goodness. Chicka 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 wheel. Komodo Rush, $5. Thank you very much. Thank you very much. Thank you. That's appreciated. Just wondering, if you have sold GME short, how does the split impact your position? Does short sellers have to go into the market to buy dividend naked shorts the same? Yo, thanks. If you've sold them short, right, so let's assume you're following the rules, then you borrowed the shares in it. So the person who holds them, they've let them to you, and you bought them, and you're getting those shares. You remember, oh my goodness, I get the dividend every day, it's amazing. And then if you don't actually have any cover, I mean, so like, what's the question? What stage are these people? If you have sold GME short, right? So you're short GME. How does the split impact your position? So then the split comes along, and everybody who owns GME share gets 3 GME shares, let's say, because that's what we were talking about earlier. Then you'll be short in that position against somebody else. And if that short is on spot, then there's some implications. If it's on an options contract, then it'll depend on the expiry date. And then it'll also depend on, of course, the intentions of the person on the other side of the trade. Are they going to exercise? So there's those, and if they, so when? And like, right, so there's that. But let's stick to people trading spot, and they're short, and they borrow the shares. And then shares are like, yo, where's we turned it into free now? Me, I'm now free shares. Market cap changes. You're going to get delivered your shares as dividends, so they'll be deposited right into your not your trading account, into your account. And everyone who's short them, they're obligated to provide the dividend to the people who they borrow the shares from, right? That's unless they're borrowing them to get the dividend, right? And in which case, the people are going to want their shares. They're going to want their shares, not just the people who borrowed them from. But I don't even know if they are borrowing them. Let's say if you're going short and you're naked short, so you're short and you're not taking options, you're on spot and you're not covering your shares, and you've got a naked short position, and so somebody owns the shares, and then your short position is outstanding, somebody closes on you there, and then you've got to deliver those shares, and then that happens at the same time that those shares turn into free shares. Well, it wouldn't work like that. I mean, it would obviously depend on what time you did the trade and whatnot as well. So if you're holding a short position, it's really relevant whether or not they've borrowed the shares or not. That's what we're talking about here. And then who do they have to deliver to them? Who do they get delivered to in those circumstances? Which would be the people who own the shares, right? Like you, for example, if your shares are in your brokerage account and for some reason you decided that you wanted to loan them out and let people short the company, you still get your dividend. Like, you still get your shares. So they're going to have to give them to you. And if they're on the other side of the trade, then they'll have to do it, right? And if they're naked shorts, and they're going to have to go out and buy them. Yes, they're going to have to go out and buy them. Those shares, for every one, they'll have to buy 3. So that's why you're probably asking. So yes, the bastards. So that's one of the mechanisms that people are excited about. And when I was reading it, saying, "Oh, look, they get delivered by a dividend," it was like 2 things that were occurring to me at the same time. And the one was, that's great. Well, free, really. First and least relevant was, I don't have to do anything. That's brilliant, right? It's great. I don't have to do anything. And part of that being, I don't have to pay any money, and that I'm not having my position reduced. And I don't have to provide extra liquidity in order to maintain my position at the size it is, and all of those things, right? So I don't know, is that 5, probably 10? I don't know, I was thinking loads of different things. So that was what I was happy about. And that's exactly the opposite for people who shorten it and haven't got shares, that are not borrowing shares to short. It's exactly the opposite. They're like, oh, holy shit, this is the worst thing that could happen. Now, I have to get the shares, and I'm on the cuff for, like, we're speculating 3-1, and I was saying, there's implications of it being 7 for 1 because there might be loads and people might feel like they've got loads and they might think, well, I don't need as many or something silly like that, not realizing it's all about the market cap. But also, if there's the other side of it, like if it's 7 for 1, then they have to go out and buy 7 for everyone, or like 20 for everyone or whatever. And that's starts turning it into real work. Tradespotting, and do they buy them post-split? What time period do they have to acquire them? There's like the people who are shorting it, who are naked shorting it. They'll have to buy it post-split. The people who are... Hi, Malachi.
Coming in here.
I'm on the internet. I'm live on the internet. Can you see? You can't see. You can't. They're slightly off camera.
Give us a shout when you're up here somewhere.
Will do. What are you up to?
What?
What was that? You all right?
Yeah. I've got pains on the side. I didn't want to say the polling goes on and on and on. I can't handle it. But I've got a terrible pain. That's why I can't sleep on the right hand side.
Yeah.
But it's a big tumour in the fucking
Were you lying down there and you had to get up?
Sorry?
Did you have to get up there because you were lying down?
That's no, because I heard the phone ringing on my friend Alice. She's got a problem with the roof. But I can't get up.
The perfect man.
I can't do it. She's trying to sell her flat and her mortgage is running out. It's really fucking... But anyway. I'm going back into watch the television.
Cool. No bother.
So give us a shout when you're having a cup of tea, will you?
Will do, mate.
Thanks,
Malachi.
Thanks.
No bother.
Goodbye.
That's my Uncle Malachi. He's from Ireland, like my mum and dad. Tradespotting, and that was the question. Do they buy them post or split or what? Yeah. So what the people who are naked shorting, they'll have to buy them. I mean, yeah, because that's when you expect to get them delivered, right? You'd have to get them. You'd get them delivered after the split, so that's when they'd go about getting them, because then they'd be obligated. And we've already we're talking about somebody who clearly doesn't follow their obligations in a timely manner anyway. And then there's people who've already borrowed them. Well, they'll be getting them in order to give them to you, so it isn't a problem. And then the people in the options chain, well, they've got a trade counter to you, and the expiry date means that it's relevant, yet they don't know whether or not you're going to exercise. That's like a decision they have to make en masse. They don't know how many people are going to exercise at all, rather than not you as an individual, and they'll have to account for that unknown. So that in those circumstances, perhaps those people are buying it ahead of the split, but everybody else, and that is like those other 3 scenarios roughly outlined there, the other 2 probably not, right? Right. So that's like, and do they do them post-split? That's that part. And what time period do you have to acquire them? Well, it'll be afterwards. It'll be afterwards is when they're obligated. Working but listening. Hope all is well. Yes, dear, thank you very much. And hi, Malachi. Hi, Homer Goldstein. Hello, Malachi. I should have said it myself. Cheers. Won't a naked short just not do anything since they have no one they are obligated to provide the shares to? Then someone will just get failures to deliver for any naked shares bought. Well, yeah, it could do it like that. Yeah, here's your failure to deliver. Ha! But like that's not what they want. They don't operate intentionally to end up with a failure to deliver. Failure to deliver would originate most likely from some operations on options rather than from just like, oh, here's a naked short position that I created initially on spot and decided to like turn into a failure to deliver in these circumstances and screw people. We should get them caught. That'd be too obvious. But like, what was the question actually? Won't naked short just do anything because they have no one? So they're not obligated to borrow it from them. Yes. So it's naked short on spot position, and that has somehow come about via their meeting obligations in the options chain, or like not meeting obligations, creating obligations for themselves is probably a better way to put it. And then here they end up with a naked short position on spot, and then it's about whether or not the people like that's a trade they've got going, and then so and again that's what I'm talking about. When do people? How does that trade? That's the question of like, if the person closes the trades on them, buys the share, then it's like in your brokerage account, you're obligated to get the 3 when the split happens. So like, if they're naked short in advance of it, they're going to want to close the position. And then again, how do you close a naked short position, right? So like then they're going to have to be buying the shares in advance of it. So it depends who it is and if they've got the shares or not. And if they're naked short, then yeah, they're in a whole heap of shit. Tradespotting, what a cluster. At what point do the masses wake up to the system of thievery? Well, this is the thing, you know, like there's a certain amount of novation, as we keep saying recent last couple of weeks, and like nobody really owns anything, it turns out, right? Like you were put in your house, and if you were like me, you were recently shown how your house didn't actually belong to you. It doesn't matter whether you'd never missed a mortgage payment in your life and you were dying from a brain tumor, they still take it off you. It doesn't matter how long you'd lived there, how many generations, how many families we brought up, they'd still take it off you. Even if you've never missed a mortgage payment, they still can do that and make you homeless. Even though you've got terminal illness, they can still do that. So you don't even own your own home, which we found out at the same time as they forced us all into them. And then that shares you buy, you don't own those shares. They're in a fungible mass at the DTC, and what you really own is a promise of a promise that's guaranteed by the same people you're trading against. And then you're like, yeah, this is a little bit difficult. And how do we see through this from the fog of war, from a city? And then truth is, like, the whole system itself is set up there to facilitate huge amounts of money and trade risk that already exists in many ways, and to facilitate people doing that with each other, and then like en masse, and like with the periods we have for facilitating all the different mechanisms and different methods and different instruments, there's like bringing it all together with this number of shares exist at this day should be something that we could rely on. But it turns out that that's like a floating day and a floating number of shares. It's non-specific, anyone, you know, and please don't ask us to look and check. And what day? Well, you know, t plus 5. Well, you know, plus 3, really, well, 5 really, right, obviously. But, well, you know, there's like also 13. And then, well, ultimately it's 35. And then, you know, again, like we were talking about earlier, there could be a failure to deliver. And sure, you'll mark that mark to market as a collateral debt on my account, which could eventually exceed my current provisions, and then I could get Marge could be on the phone. But like, you know, really, this my own position itself is quite complicated. It's got various complicated hedges within it and arbitrages, and for you to say that it's worth any given price on any given day is also very, very difficult. So you're trying to measure my collateral against my obligations, and you know, tomato to potato, right? You say tomato, I say potato, right? And this is, so yeah, it does get like that. But also, we are trying, you know, these are systems that have been set up. Originally, it was to facilitate trade and to do it fairly, because entrepreneurial activities themselves were generating enough money at the time that nobody needed crime to fill their margins. So, I mean, the systems all genuinely could work very well. It's just that it's been a little bit corrupted over the last number of decades, like particularly the last decade. It's certainly in the last decade. And then on top of that, you add in, well, you know, money doesn't mean anything anyway. So especially not when they've the last couple of years, right? And then the last couple, like, well, you know, we've got this huge debt, let's make it more, and that, and then everything. So, you know, yeah, you don't really own anything, and in future you'll own even less, and yet still you'll be told any day now you're approaching a future of abundance, that you and the rest of the world will have no lack and no need because of the great work that's been done by technology companies who themselves like to imagine they're God. And that's how you're convinced that you can deal with the cost of living standards dropping, because, you know, there's this extra technology and you can listen to this music on this iPhone and it's fantastic. And you couldn't have done that when you were a subsistence farmer, right? You couldn't have, let's be honest. And you don't know how to make that iPhone, so you should be happy and shut up. And then you're like, but I'm not happy. I'm not happy, but I will shut up. And then generations go by and Kenneth Griffin is king. Thanks for that reminder, Ghost of Cory Bing Bong. Jamie's vids are always worth multiple rewatches. Yes, just so I can understand how terrible I've embarrassed myself is one instance, but that's true. Justin Purple, yes, those are direct and do not go through this murky system. Those directies, what these you route in your orders. I like my edges to look like dinosaurs. Very delicate work. Ooh, does this look sculpting and carving. I am selling the Eiffel Tower for scrap metal. Any buyers? Scrap metal? You're selling it. Any buyers? Probably a number of them, right? Spinning plates. She's very entrepreneurial, Sarah Herrera. She's constantly on the phone. Number of phones. Usually there's 4 or 5 phones attached to her head at once. Doing deals left, right, and centre. Left, right, and centre. So, Komodo Josh, thank you very much for the $5. We didn't get onto AMC. Let's have a quick look at AMC, see what it's up to today. What are you up to today? Hello, I'm doing shit. 1584. Turn off the drawings. Ah! Shit. Oh, didn't mean to walk into you like that. I'll knock next time, but did knock, didn't I, MC? So there's a 200 period moving average on the weekly time frame. You've reached it once, twice, and then you're back at it 3 times. This is where you broke out from. So, there's distinctly different artifacts between AMC and GME. Like, for example, this is on the 200 period weekly moving average, which is where it broke out from. And if it breaks down below that, that'll be effectively below, an area synonymous with like the area it broke out from, right? Like this didn't break out because it was at $10. It broke out because it definitively broken the weekly trend as marked by the 200 period moving average. And it looks like it's going to fucking do it on the opposite side of it. That's distinctly different from what's going on at the minute on GME on the weekly time frame. Bam, ba-da-bam, bam, 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 ba-dum, bam, where it's still way below you at $60 and it's still the same relevance in terms of it's where things broke out from. So, there's this, right? So there's completely different, but whatever. People like to look at it on the 15-minute and talk about like one candle to the next and think, look, it's moving exactly the same. And you're like, well, there's a million of things that move exactly the same. That 1 minute to the next minute. Like most of it is computers and they don't know what's going on, right? So anyway, yes, there are ways of making it work though. Brief took a bit of a jerk down just to that level. Like, so this was a brew he was talking about because John's back on so I can see if I got him out. Yeah, so excellent. We were talking about the time. It was like 8:3 or 7:8 or whatever. I can't remember. You was only talking about Reef like recently once, so this is when that was it. And it got then down to that first level, and the second one then broke out of this like Titan information is currently coming back for a retest of something, right? Is it this horizontal? It's a little bit below there. This horizontal's kind of nearly at there, but not yet. So we'll see how that goes and see how the overall crypto market performs. And if so, this could be it might be that it drops down a little bit further. And then you look left, this where it previously caught it at not 6+ and a bit. I mean, it seems scary, but really not when you're trading this, probably because you wanted to break this 236 here. That's at like over 100% price action. And then you're looking for it to get up to there, which is 7x after that. So that's probably why you're looking at this. And then maybe, within that, there's probably lots of areas where you'd be taking the profits. And no day, probably right. 1.318, so another potential opportunity on this thing. Very close. Very close. We didn't actually do this. Oh shit, I didn't do this. Anyway, so the weekly time frame, right? It seems also disparaging when I talk about it like that, but it's not, and I'm not disparaging anyone else's perspective on the two things. And right, and if you're seeing it and analysing the trend and it's the same on any time frame or whatever perspective you're looking at it, it is, then well done. But there's distinct differences as well, and so and often there's people who should know better on Twitter or wherever else is like, this is the same. And you're like, well, it isn't. I mean, I know why other people might say that, but it isn't. So why are you saying that? And it's like, well, God, can't engage heads or can't engage. Anyway, what's this? AMC. Could draw those lines slightly differently. It's just dead funny, actually. All these, it's like, I don't know why it reminds me of Game of Thrones. Game of Swords. Never crossed this. Anyway. Make it slightly cleaner, shall we? That's a Fibonacci. We'll keep that guy on, or at least update him, maybe. And then move this guy. What are you doing? 15-minute time frame. That's not a place for a cleanup, is it? Really? This downward sloping channel within this overall formation, that's suppose relevant. We shouldn't really delete it. No, we can just draw new Fibonacci's, and that gets something out of the way. And we'll turn off the moving average so it's slightly less busy. Not that helps much. Well, there's 2 lines within that one, so even cleaner. No, that's that one. Darn. Well, I'll just make this one longer then. Right. And relax. So this is a channel, and then in it is a channel, and then that's all inside a channel. This one goes down, this one goes down, and this other one goes down. And what do you reckon price action does? Oh my God. So this would be an extension from there, probably 2618 already. No, Tradespotting. It's only made it to the 1618. You're off your face. Looking left, 786. That was the breakout zone here. If I turn off these drawings, it is clearer. You can see that there was distinctly different price action after we came back up here, broke this level of, I mean, I'll just, no, I don't want to delete those drawings. I'll do a new chart on this one, and then I can keep those drawings and get new ones. Yo. Wouldn't it be nice? There we are. Ugh, I hate these I was about to call them dolphin. I hate the dolphin settings. Ugh, those out of the box dolphins are ugh, right? Ugh, like your custom dolphins. So your top side of that, right? Great. We were back inside it. Crap, right? 15 minutes, not relevant. Daily time frame. This is what we're looking at for the breakout left. Price action distinctly different after it made it back above a particular horizontal. Right, here we are, starting off with this stuff, right? There was the low there was your ultimate low, then that part of the trend, and then this was this part, right? And this was also your breakout area, and this is important, like not the breakout area, but your recovery zone, I suppose you would call it that. And you got the third positive candle in a row, and that led to the continuation, I suspect. Looking left, you can see the actual breakout area was here, which is where price action is at the minute. So this is definitive. Right? This is definitive, and you're on the daily time frame, so it's significant. Looking left, I'd say that's interesting. I also put a number of horizontals on here from Fibonacci retracements to the top side. We've got that 1618, which is kind of where price action is from that low. Let's take it from, is this lower? No. Well, we can see first up 886, that'd be interesting there. I'll put that on. If you break that, I'd suggest this overall trend is likely going to be tested at its body low or wick low, so I don't know those other horizontals either. And just above that, you can see it's the breakout zone. That's where price action already come in at. Corey just super chatted 690. Yo, Tradespotting win tens. That's my only AMC entry. Yo, 2 seconds. Justin Corey. The first video I ever saw from you is a year old now. Way hey, happy birthday. In a week or two, the first full live streams I started watching without missing a single stream will be turning a year old as well. I think you should feel quite a lot of pride and definitely not net embarrassment. Darn tooting. Well, a lot of pride. I don't really feel any embarrassment about... I feel just pride over what we've done and achieved. Thanks very much for being here so long, Corey. Feel lots of pride about what we've done. Lots of education. Lots of help, lots of positive messages, lots of connections, funny jokes, nice times, and I think it's all been very, very positive. I'm super happy. I'm super proud to have met people like you and be doing this sort of thing with people like yourselves. It's great. It's much more worthwhile than the other things I've done, which, you know, I mean, I've talked about this recently too. You know, there's like a pride in doing these things that's way more rewarding than money. Like people are like, why do you do this Tradespotting? You know, why do you do those things? Why do you do the next thing? And I enjoy teaching people things because I enjoy how people feel when they learn something that they didn't understand before, or when they like get better than somebody who they previously thought was better than they could ever be. Like I love that. And also I like people learning what's actually going on. And I think that like punctures part of the overall frustrations I have with the world, so that so many people don't know what's going on. So I enjoy that and think that we've been able to do this together is amazing. And like not necessarily it's not like, yeah, sure, you could do other things that would be more financially rewarding. I could every single day and that, but that's only like a hygiene factor to a certain amount. Like you only need a certain amount for it to feel like that's rewarding. Over and above and beyond that, it doesn't feel necessarily rewarding. Well, not to me anyway. So like it's like a hygiene thing. So like I'm like really proud of it, really proud of it. Even and especially in those times when it's hard, you know, and you keep going, keep committing to things. Also, there's like that, like never breaking the chain. Like you say, never missed a live stream, never missed one, never broke the chain. Always kept promises to everyone. Every viewer ever made a promise to kept it. So and will continue to do so. So I feel pretty proud about it. And then personal achievements, like this isn't even unlocked. Get unlocked, you stupid thing. And then personally, when you do anything and you never miss a day at it, that's a significant achievement, right? Like most people will have had a holiday in the last year, or at least a bank holiday, but I haven't. So and that's not a complaint at all. I feel like that I've achieved something super positive, when you've still got staying power and you're like, could I do this thing? And you're like, yeah, I could fucking do it. So I am definitely proud of it. So 236 on this from your high to your low comes in at this previous level of horizontal, which I'm not necessarily sure is going to be tested in the immediate future, but like that's in below $20 at the minute. Has been since you put in that low. And price action then would be looking to perhaps this Fibonacci, see how far it's gone beyond the 786. The 886 is a further extension. At that point, you'd have been breaking this, I'd say, and you'd test the previous low here, and then you'd look left and see there's actually this area where you got a low on daily time frame, and what's that look like on the weekly? That was obviously resistance, and it was an important area for the breakout, and that comes in at around $11.99 or below, and the 1.13 extension is still at 11, so there's that area. Now these are all targets that people will be aiming for, with perhaps if they're short, or alternatively try to enter. Like these are right. And then this area, well, I wouldn't put much faith in that. It was all like that retest. This is even like stretching it on that 1.13, because this Fibonacci isn't all that important. And then you could do the overall one from those lows. I mean, a lot of people would look at it from before we even started talking about, they go from that low, which is the important one, to this high, which is the all-time one. And the 236, you broke that. Golden pocket, that takes you in around the 1618. Like, this is why this is why it's dodgy now for AMC. I'm not saying it's dodgy like FUD or whatever. Saying like if it doesn't hold those levels, there's very little in between here other than these lows, which we right. So there's those lows, so I'm not going to ignore them. But there's there's also this golden pocket and 1618 extension, and that's like a super magnetic effect. Like people all over the world who do trading will see that and know that it's there. On the daily time frame, like it's just an opportunity to catch people out. It doesn't go there though, because there's loads of places that can turn around in advance of that, and then there is places in here horizontally that would be interesting. The price session could stop. On the weekly, you don't see all that many. On the daily, there's a couple. On the 4 hour, dropping down, then you're more looking about what's actually happening at the minute. And if the oscillators come back on, no, they don't come back on because I've not got them turned on. So I'll put on some RSI just for that. It's not in the bearish control zone yet, but it doesn't look super positive. This horizontal might be on the catches price action, but you broke out of a downward sloping trend there. No bullish divergence. Looking left, I suppose there was from the previous low, and 236 retracement, back down again, new low, bearish on price action, but bullish divergence. Tested back up, that was just to the resistance within that previous trend. Nothing to worry about there. But then between these highs, you can see that there was continuation divergence, price action back down. You'd likely look to support on the 4 hour time frame, bouncing around, support for divergence that way. Then we're just taking this Fibonacci here from this breakdown. See, where did you get to there? 886. Sends it on a wick, but that was just 886. And then price action here on the flip side, does it just come and mirror that and come back down to 886, even potentially with a wick within it? May well do, so we'd be expecting continuation AMC down at the 13 levels, and then if it doesn't hold them, down to 1135s. And then there's this huge area down here, but in advance of that, there's things to look out for. Rock outcrop flash on the daily time frame, and then you can see like demand and supply and extra information about volatility and where trend changed and where the way that this thing works. It's so very, 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 very compelling that price action comes back to those areas. And then when you see it at 1088 now, and you see price action putting in this continuation divergence, sure, like within this leg of the move, fine, but overall, like, no, not very, very good, is it? And then certainly not very good, and failing to make it back to that golden pocket, so then you'd be looking at continuation. The overall market suggests that this is likely to happen too, so you're right in around 1088. When's that going to happen? Well, after it's broken these levels. It's the cheeky answer. So that's that, right? Covered those two things pretty well. Covered them pretty well. And we looked at a little bit of other things here and there. Got a nice message from Corey. That was a really nice message. I am really positive about it all. Really positive about it. And it's great to do it. And, sticking up for good people, it feels like a lot of the time, whether they be people I've never met on the internet who happen to have experienced similar things, or people in my family who've had the piss taken out of them by banks, in much the same way those banks will take the piss out of your family, or will do in the future. They'd love to, if they could get away with it. So I feel like I've done a good thing, and I feel like I've stuck up for good people, and I'm going to keep doing it. And I'm not going to stop. Probably get better at it too and piss them off more. That's the hope. Also, I'm like really, 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 really proud of you guys, right? So the only reason I can keep doing this is because I was thinking this earlier, right? Because in this show too, is another example of it. I do look across CEO Jeff Cozy and Wob Safon and Lisa. Hi, DK. So like, it's interesting, isn't it, that it feels like company. These streams feel like company when I'm often doing something where there'll be another person, and like I know them, and like you call it company, and it is. But something different about this quality of company. I'm not sure what it is. It's interesting, considering that the interactions are still also so very, in some ways, limited because of the format and that. Anyway, whatever, I'm getting distracted. Right, AMC, great, fantastic, did that. What's MNMD doing at the minute? Oh, more of what we thought it would, like, for goodness sakes. For goodness sakes. This log, yes, what's that look like? It's not all that bad, actually. Right, it's not actually. I'm not going to learn much from this one Fibonacci, but it's interesting, this. This thing just looks like it's even more bad news on the way. Back to GME, 126.80, 126.26 is the low for today. 5-minute time frame at Tradespotting. Aye, your family of a show. Yo, KT. Family. Still got that flash up here. Love this, fam. Now I'm hungry and want a steak. Yummy. I had lentil soup. That's all I've had today, but it was really good. Vic Vince Tradespotting, can you check WWR? You bet I can. Westworld resources. There's a flash in 5 minutes. Absolutely miles away. Weekly? What we got on the weekly? So that was Malachi. He was just in there. He has health issues and he's worried about them. One of which is tumor in his leg. But he doesn't want to tell my mom about it because he doesn't want her fussing over him. 236. So it's Tradespotting. Everyone wants Tradespotting fussing over them. That's who they want. Up to 236. You break the 236 up at 8.89, right? He's looking at that from here. We've had one move to it so far, and RSI is not doing anything positive. That was huge continuation divergence expected there. Come back to your body close, body closing at 0.88. like this is interesting though. This is interesting. It's been in what we would call a downtrend since forever, and not been very good to those people who've invested in it so far. At each of these highs that it's come up and then subsequently dropped back below 236s. I mean, this any uptrend, which is obviously going to be confined within a greater downtrend, has expressed bearish divergence. But then, as we say, that was in the context, it was all in a greater downtrend. And when you do look at it in terms of the downtrend, you can see that it also had bearish continuation divergence. So, like, it's been really, really, really bad to its investors, but it's also been saying to its investors, look, I'm going to treat you really, really badly. And so that's happened. And that's why some of them have left, which is also like the continuation for that bad treatment for the others. So, price action here coming in was like we might have been hoping that was bullishly divergent. You see the higher low and oscillator. Lower low price action. A failure here around the center line, this previous retracement and price action failing to make it back up anywhere for even break out this downward sloping trend line, really. It's really not inspiring. And then there you go with the continuation divergence again. Like, yeah, great, let's make lower highs and be awful to our invest. And then so price action, and at this stage it was all flirting around with, well, this is a retracement back up again. At that stage you weren't on this, but let's say after you've come in for this, like with this recovery, and people might have been enthusiastic, especially with the trend the way it went on afterwards. Looking left, has someone come to my front door? It's a 236 here, and you went back above that, but you're bearishly divergent the whole time. Absolutely rank. Back above 786. That is someone in front door. And then you failed to break the 886. You're never going to turn that trend around anyway. That was so freaking obvious. Price action failing at that level was failing at the golden pocket on this Fibonacci and coming back from that direction. Hi, Rich. How are you doing? Yeah, here. Will you do this? What are you up to? You're not with Mum, are you?
No.
Will you take those and make that? Yeah, I'll be finished in a little bit. Will you do that? Yeah, I'll see you there. Also, where is everything else? Possibly there. And in that jacket, there'll be stuff in that jacket in the pockets and all that as well. And then put the kettle on, and then I'll go and see Malachi for a bit. Right, everybody's doing grand. What were we talking about here? Oh, we were going to answer this on the WWS, right? So it's the worldwide WWE worldwide. It's the wrestling. It's the wrestlers. It's the wrestlers. Wrestling. Right, wrestling. This has had perhaps turning over with convergence and continuation divergence. This, and if it's so, it's awful, and you'd at least aim to the 1.13, and that would be down at 0.14 if so, right? It has come in with bullish divergence between these lows. That previously, when that happened, like we were talking about this back, where was it? We talked about that here. Yeah, between these areas here, price action came back up, and then it tested that previous low, right? You had the bullish divergence here, looking left. Your oscillator's higher than your previous low. Price action's lower than it. That's bullish divergence in the downtrend. So price action went up again, but it then put in continuation divergence here with these, and then especially here when you like this one's like looking left between these two eyes is lower, and it's way higher, right? So, and it's in the context of anyway. So that's continuation divergence. So then here you got this exactly the same scenario with the bullish divergence, then the continuation divergence, and then price action is looking like it's coming back, and it's currently looking like it's aiming back for that previous low there, which is like interesting there on a weekly time frame. There's more to look at in that, but that's just like the first part of it. And let's do it on this where I actually like my colors and get more information there. Also go back to the weekly and draw some horizontals on again to see now that we're off that horrible colors. This is, considering how long it's been around, it's amazing that it's been in so much of a sustained downtrend. Market open. Westwater Resources Inc. is an explorer and developer of mineral resources. It focuses on developing battery graphite business in the state of Alabama. Wait, how's that related to the first thing it just said? Explorer and developer of mineral resources. Okay, developing them into products. So it's like, wait a minute, are they a mining company or have they got products or what? Anyway, right, so they've been around for freaking ages. I should know about this, right? 1991, nearly as long as Sir Tradespotting. Right, so this is the high, this is the low. I've not done that very accurately. There's your 236. I don't know how accurate that is either. Let me triple, quadruple check that. Close enough. There's your 236. There's your golden pocket. There's your 86. Let's delete that now. Thank you, out of my face. And then let's drop back down. Daily time frame. Get relevant horizontals from the recent price action in here. Then, obviously, that's them already. That's them. There isn't any others. Erms. Well, that's crap. 4 hour then, get on the very, very least. I mean, there'll be some somewhere, but like, you know, relevant ones for what I'm going to go and talk about anyway. So there's that flash. I mean, like, there you go. Lucky you, Jamie. And then another one. And ooh, looks so easy when you're on this time frame. And this flash up here. Woo, Get in there. Right. And then obviously there's these, you're on the 4 hour, I'd say this is relevant to take it up here. You can see that's relevant with your 236. That'll be why that was horizontal resistance. You didn't get much at the golden pocket when you came back down here, just continuation all the way through it. The RSI at that same stage was putting in a little bit of bullish divergence on the lows, but then continuation divergence on the top side every single time. Further down, and you know, the trend is your friend until, you know, it is what is until it is what isn't. So, and then distribution here, money flow index, any of the new money that was coming into this for a considerable period of time, since far back as 2021, this time last year, has all been really downside interest. Well, that's the way the open interest is. Like, I mean, the money coming into it, right? You know, I'm speaking like, maybe it was a little bit oversimplification, but I'm trying to make a point. Anyway, so DMI, point to the top side, ADX coming with it, right? 4 hour time frame. That's when you were at your previous level of horizontal resistance above here. You were hoping that, like, and that was that's crap. That is at the time. And then your MACD slipping back below there, the crossover. That's awful. Obviously, that's all happening below the 200 period moving average in the 4 hour, which is itself above the 50 simple. Exponential is even below it, right? This is 55 exponential. That's 50 simple. So, like, when it's below it, that speaks to like even more of that. Anyway, so not great. Acceleration to that particular part of that trend. Then the 8 period below it, right? So there's a combination of moving averages and why I use those ones at this particular time. You're below the 8 period on 4, that's awful. This crossing MACD, that's awful. You're falling into the bearish control zone, that's awful. You've put in continuation divergence again, for God's sake, right? Like, pardon me, but right, like, ugh. And I mean, why would I curse so much? I'm not even doing this. So I don't even know exactly what they do, in fact. So, we'll be looking at from, get out of my face, we're looking at this from this high, and we'll see what does that mean in terms of recovery. You're not looking at it anytime soon, but the 200 period moving average is about to go through where your 236 would be if price action turned at the minute, so that's probably not great, right? For the trend turning around. You know, if it was to here, then you'd find resistance before you even input what would be a local top. So perhaps it is the you know, and you're at the 236. You're at the 236 before you're at a 200 period moving average. Should the low actually be lower than it is? And like at this point, you're having crosses that are like, these are, if you know, these are nearly valid sell signals. I mean, back here you were getting one. This was a very good one. And at that stage, you'd be expecting at least 1.51. You're in the bearish control zone. You'd just be looking at more of this thing. DMI, the ADX strength at the same time. This is like, what was the question about this? I don't know what the question was. Sugars. Tradespotting. These guys hate their investors. They dilute on every chance they get. Tradespotting. But I'm thinking about that 2 hour and 1 hour flash. It's Vic Vince and 2 hour and 1 hour flash. 1 hour flash up there. 2 hour flash. Yo, where's my 2 hour? Tradespotting, why haven't you got 2 hour on here? Do you not like me? There's a 2 hour. Another 2 hour flash at 178. What's the 1 hour flash at? 178. Ah, well, flipping a heck of them woogity bubs. Well, if that's where you're, let's see what you're looking at then on these lower time frames. This lower low on price action, higher high on the oscillator, great. You've even captured your own moving average, which is funny because you don't usually do that before you get out of the bearish control zone because it's usually quite a reactive place to be. So you see the little flash. Anyway, great, a little bit above that, even better. So you're again looking at this thinking, well, continuation divergence, maybe not, right? Maybe not yet. You got across the MACD. At this stage, you'd be aiming for perhaps a 236 retracement or a 200 period moving average. If you take that as the high from it, there's your, and you've had this cross here that was already bounced off the 236. Then you had your MACD cross. You still found resistance at the 236. Subsequently, you've come in, you've put in, well, it's a higher low on this part. If your capture moving average and this cross keeps going on these 1 hour negative trend there is it has been in ascendancy, but you've got the right slope on each of these, and then this tying off in terms of the open interest is like receding as this reaches the low side of the trend, and volume again receding. So you would not you're not seeing anything that suggests that reactive moves in price action yet, despite the fact that there's a flash here and this looks good. And you have got a potential way ahead if this cross plays through and you get back above your own moving average there on the 1 hour and RSI. You can see in the 30 minutes you managed to make it out of the bearish control zone. Like I say, that's positive and very reactive area, and you're back above your own moving average. It is playing out well, and you've got a positive sign in the histogram, and that looks like, you know, with the combination of bullish divergence now, should this price action make it back above a 236, which I mean is like, this is not what you do, right? But there's 236 there. There's one. I can tell you. I see. We found one. It's back above it. Okay, divergent signals. Go. But well, not really. But like, it's a positive sign. The fact that you've made it above one. You want to aim for this one. 236 here. You make it back above 138, then the move to 178 might be on. There's your golden pocket in advance of that 158. So probably a place to take profit before them. Probably. Likely, if this was breaking back above the 236, you would see this, any open interest that was being added to it be to the top side, long trades. You'd likely also see the RSI pushing back up and aiming towards the center line. This thing recover the 236, then aim for the golden pocket / 200 period moving average on 30-minute time frame. Extension beyond that to this previous area and fill in the flash. Possible. Follow it with stop loss and whatnot. I still have a take profit area in around there if I was taking that trade. You have got a touch of bullish divergence if should price action gives you a possible entry. And if you're looking for some sort of candlestick formation, you know, potential bullish engulfing on the cards here on the 30 minutes, though. How long's left on that? Give me my countdown. Not giving me it there. 15 minutes time frame. Not getting anything in particular there. Suppose you could look at that and see. It's just not possible. 15 minutes, not getting any consistency. 1 hour. 236.30. You'd want it to exceed that 4 hour. 8 period moving average coming down to meet you. I'm not getting like immediate entry signals right now, though. Even though, that being said, on the tiny time frames there is such a bullish divergence, but on the 15 minute maybe not so much. Look for it on the 30 minute to start playing out here, holding its own moving average and moving up. Break that 236. It takes a chunk of change off the thing already because it's at 130, and then you're waiting for what, 137, 138. Break of that zone, that would be what I'd take as a signal, and perhaps I'd take my take profit down here, and then if I was playing that, follow it with a stop and hope to get the rest in it around this flash, or see the trend exceed that flash and then put my stop above it at that point. You know, the flash itself would have gone, but it would still be there on the chart marked down. You'd still be able to use it as a stop loss, and you'd have a trading profit. And maybe that's what you're looking for if you are thinking that this thing is going to turn around, which you don't, because like you say, they dump on our investors all the time, and they have done since 1991. And I don't know why they changed their mind all of a sudden today. But if they did, and then you're looking at this 200 period moving average, you make that at $2, and that's maybe something different happens for this thing. I mean, it's not like it hasn't been above the 200 period moving average. What's it like on the daily time frame? I mean, it has been there in the last 20, however many years it's been. It has been above the 200 period moving average on the daily time frame. I mean, it has been, not like really rarely, but it has been like briefly, and it started, and then really not, and then like for a while, like this was an uptrend, but it was as much below it as above it, and then it was only below it, and then again that was like similar previous uptrend, and then and I mean, yeah, so I mean, this is awful. Like it's awful. They're not going to change their mind. This is what is this scam? It's a scam. Yeah, but that's an interesting flash. You want to look for the volatility as well coming up on this thing. Maybe judge it a little bit on that. Where is it? Where is you? There he is. We'll take some of these guys off because we don't need everything on, right? It's been building up. Your volatility has been building up. We're going to redline. Let's see. Get on a daily. What's it like on 2D? Get a slightly cleaner picture. Yeah. Volatility is building up on this thing too, and it's going to start going a little bit boo, a little bit wham. Maybe that flash is just the first step on a recovery back above a 200 period moving average, and a test and a failure, and then more liquidity and dumping on you. Oh, a really good show. 129 here. Holy sugars. 129. What are we talking about? People, viewers. 73. I got 73. Update. Go. Give me more. Oh, maybe it's likes. 129. Maybe. Anyway, great. Thanks very much. Good show. Nice being here. Great checking in on Tuesday, catching up on things so people aren't too worried. Obviously, AMC back down there, $15 and change. GME similarly low, but you know, it could be worse. Could be Tesla. Could be down there. Could be going down to a flash. That could be halving in value or something. Oh my goodness. Oh my goodness. Or it could be in FIV. Head and shoulders. Nightmare. 200 period moving average. Bye. Golden pocket. Still didn't hold it, and then earnings getting worse. So interesting. Right, it was great. Thanks everyone for being here. Hope that was helpful. I'm going to get back and see Rocky there. Quickly check in with him. He's dealing with Maliki. Everything will be amazing. Everything will be so amazing. Everything will be brilliant. And then I'll be back tomorrow. It'll be even better. Tomorrow's even better. Tell your friends. If you're new, hit the subscribe button so you don't miss out. There goes the wheel. There goes the printer. Vic Vince. Thanks, King Jimmy. Thanks, King Vic. Thanks, King Vic. I hope I was helpful there. Yeah, look for the volatilities, but I'd look for candlestick patterns, and I'd pay attention to bullish divergence. I'd look for a lot of bullish divergence, and then I'd look for some sort of bottom information. Did I see anything there? I didn't really. I mean, I got this potential bullish divergence on the 2 days, quite obvious. There, 1 day. This is fab. This is not what we were just looking at. Oh well, I'm off at skis. I'll be looking at that though. Candlestick patterns as well. Oh, for the moves. Pay attention to stop losses and whatnot. Can't be emphasized that enough. Thanks for everybody for being here. Thanks for everybody who puts on YouTube. Why YouTube? What's it doing? Puts on YouTube. Puts on YouTubeos. So thanks very much for being here. And thanks Vince for that 420. Thanks for Corey earlier for that really nice message, 690. And thanks Komodo Dush for the $5 for just being generous. That was great. And thanks for all the members. You can support the channel by being a member or Patreon or millions of other ways. It's all appreciated. Thanks so much, everybody. The 19th of May, that's when those 1 years of uninterrupted live streams start. Obviously, we've been around for longer than that, but that's when the Never Break the Chain stuff started. So that's what I'm aiming for, 19th of May, for a celebration with you guys. So be there or be square. See ya. Also be there tomorrow, eh?